Hello, everyone. Welcome to the stock-specific class here for Thursday, June the 16th. Apologize for the market update class on Tuesday. We had some technical issues, and hopefully those have been fixed for next week, but was unable to get that class done. So I'll do, again, like I usually do anyway, do a kind of a market update first, and then we'll look at some stocks. And particularly since I'm really not going to be recommending anything in today's class, with a sell-off like this, it has the potential to get worse before it gets better. And although I'll talk about this in class, although there are some bottoming signals that are starting to show up, we still need to kind of see that panic sell-off before I'll start feeling like we're closer to that bottom. But before I get to that, though, if you have any questions during the week or any questions I don't get to in the live class here, you can go ahead and send those to jerry@traderspro.com, and I'll be happy to answer those for you. Let's take a look at the directional alerts, and we'll get into the charts themselves. But as far as starting to see some signals of a potential bottom, obviously we're at the far left side of the bear market indicator here. This is a long-term indicator, but we've moved to an extreme level in the selling that could indicate that we're getting near a bottom. Although keep in mind that we overshot on the upside, where we were at the far right side of the extreme bull market condition, but we got even more extreme. We stayed up there for a long time. Now, I wouldn't anticipate the same thing would happen with the selling. Bottoms tend to form a little bit, reversals tend to happen a little bit sharper on bottoms than tops. Tops can kind of grind. They can be overbought for a long time. Usually what you look for bottoms are the panic selling that tends to be very emotional and then tends to reverse sharply after that. But since we haven't had that panic sell off yet, I would assume that we're going to stay to that far right side for a little while. And so, I don't want to, excuse me, I don't want to just buy in just simply because we're at the far right side there. All right, so then we look to the shorter term indicators, momentum. Now we did bounce a little bit from yesterday. Remember, sorry, I'm kind of congested. I can't tell if it's from my cold I had a couple weeks ago still or allergies. I get allergies really bad this time of year. So if I have to clear my throat a lot during the class, I apologize. I'll try to cover the mic as much as I can if I can remember. But remember, these indicators update overnight, so this isn't factoring in today's sell-off yet. This will probably push it back to that far left side. But before yesterday, we were at the far left side in the extreme level there. So the fact that we bounced a little bit yesterday, wasn't surprising from that standpoint. That once you get to that far left side of that extreme bar, you're in a spot where it's telling you're oversold. You're in a place where you could see a rally or a bounce. Now, again, it doesn't have to happen immediately. So, could we see another day or two of selling? Keep in mind, especially since today's Thursday, that if we get another sell-off tomorrow, just like last week, markets don't tend to bottom on a Friday, and so there could very easily be some follow-through to that next week. Now, I have to double-check this, but I heard that Monday, the market is closed on Monday. I was trying to think, it's not 4th of July, but I think it's that the Juneteenth. That's the only thing I can think of is the Juneteenth holiday. I hope I'm pronouncing that correctly. I don't know much about that. I'll have to double check that because, again, it would be one of just a closure that I wasn't aware of. a market closure that I wasn't aware of. But if that's the case, then Tuesday would be the Monday, and you could have some extended selling then. So actually, this is setting up to where you could have that bottom panic selling bottom type scenario. I think tomorrow is going to be a key day then, because if we bounce or rally tomorrow, that takes that off the table. But if there's even further selling, especially if it starts to get panicky tomorrow, then realize you could have a big gap down when the market opens on Tuesday. And then maybe that is the whoosh that you're looking for. I still am not going to talk about a bottom until I see that VIX above 40. I just think that's just a critical level. It would get us above the previous highs on the VIX, and you can't talk about a panic sell-off bottom if the VIX hasn't even gotten above the highs it was in March or even late last year, early this year, and late last year or February, in that area there too, where we sold off a little bit. So that's kind of the signal to me that there's panic then in the selling, is if the VIX can get above 40. We'll look at the VIX chart here in just a second. So this is what makes this period though a little bit confusing, because we're getting some of these oversold signals, and I'm going to show you one that's really screaming that we're near a bottom, but we're not. And again, I know sentiment isn't really a calculable indicator. It's more of a feel, and I get you engineers out there, your mathematicians out there, you scientists out there, you're looking for equations to tell you what to do, and that's part of the appeal of the software. Is it's more mathematical, it's more algorithmic based. But I think it's valuable to incorporate years and years and years of experience, and particularly years and years of human nature. And I'm telling you, these major bottoms don't happen without panic sell-offs at some point, and we just haven't seen one yet. And it's been pretty orderly for the most part. And even today, today's starting to get a little panicky, because people thought that, okay, the Fed did what they said they were going to do. They telegraphed what they were going to do on Monday. They raised it by that. They're showing they're getting a little bit more aggressive with inflation. Maybe that'll start to do the trick. But the market bounced a little bit yesterday, but then it's come right back down. By the way, I talk about this all the time too with Fed announcements. Of a lot of times you'll get those false moves, and we did get a little bit of a false reaction yesterday as it tried to rally. It obviously reversed it today. So we'll see what happens there. But I just wanted to be pointing out that we are getting these signals that these bottoming signals that you would look for, and that's one of them here. The breadth indicators, again, near that the left side of that extreme range. Here. Oh yeah, a couple comments that the market is closed on Monday. Yeah, I'm assuming it's related to the Juneteenth holiday, but anyway, I'll have to do a little bit more research on that. All right, so breadth indicator, again, same thing, and it bounced a little bit just because of the rally yesterday. Sentiment, though, again, this is still high. We did back off the extreme level, but again, we need to get sentiment back in this, at least in this area right here, to really signal some fear. And that's the last thing. That's really the last thing that we'd be looking for. Buy-sell ratios are getting extreme. Sells, you see a wide margin there, not as wide as we were back here, but we're still in an area where that would be considered pretty wide. We should start to expect that it would start to move closer together. Um, this is the buy-sell ratios of the entire market, and you can see that ratio. Usually we like to, the system that I teach as far as looking for high strength, right, 98 strength rank, going from hold to buy, that approach that we usually take on Thursdays, it works best when that buy-sell ratio is above 1, which is right up in here. And, we're at, where are we at today? We're at 0.08. I mean, that's about as extreme as you can get. And this sentiment indicator has dropped. It bounced off that buy range down here. That's showing the market's oversold. So again, all we need is that panic sell-off, really. But here's the one that really visualizes the extreme levels that we're at. If you go on the index tab right here, this is showing you the buy-sell ratios, how many stocks within these indexes have buys. In the Dow Industrials, there's only one stock out of the 30 Dow stocks that's a buy, 22 that are sells. Look at these ratios right here. I mean, that's about as low as you can get. The Russell 3000. This is basically every stock that is big enough to trade. Only 77 of those 3,000 stocks have buy signals. 1,200 of them have sell signals. Now, could it get even more extreme? I mean, there's still 670 that are in the middle here under hold. There could be more that could move to the sell side. But that's what I'm saying. We're seeing extreme oversold conditions. It's just a matter of that whoosh that often accompanies bottoms. Not to mention the fact that, and we're starting to get there, because I'm finding myself starting to do this. Remember, at a market bottom, you're not excited to buy. You're not saying, "Oh, this is the time to buy." You're scared to buy. You don't feel like buying. And whenever the market starts selling off, the feeling starts to become, boy, how much worse is this going to get? How much further are we going to drop? And I'm finding myself starting to especially today, because I thought we'd get a little bit of bigger bounce from yesterday. I was hoping for a little bit bigger bounce because I wanted to short the market, but because we're in these oversold conditions, I thought, boy, the market could bounce right here. And so I want to wait to short the market, wait until we get a little bit better bounce, and hopefully get a bearish reversal candle or some signal that it's rolling over. We didn't get that. It just dropped today. And I found myself thinking, wow, that's, how bad is this? Is this the start? Is this going to start getting even worse? And so I think we're real close. But yeah, the numbers here, that's some pretty big numbers, pretty big extremes on these ratios. And again, if you're not worried about trying to get a better timing of the bottom, and you've got a pretty good time horizon where you can kind of wait things out, boy, this is ideal to start nibbling on positions. Now, I think you'd want to stick to companies that are actually making money, actually doing well. Now, some of these companies have been beaten down just with everything else. That's what happens in big sell-offs. But companies that are still operating very well and especially in this environment have still managed to hit their numbers and they're making money. They're not these tech companies that are relying on borrowed money to survive. Those you could start to look at some of those companies. Now, if you're going to ask me which ones are those, I'm not a fundamental trader, so I'm not the one to talk to for that type of advice or recommendations. And I'm a technical trader, and so for me, I've got to see it on the chart. I got to see some action on the chart that's signaling that we bottomed and are starting to move back up. And what would be that signal? Well, one of the things the basic things I look at. Here, let's get over to the charts here. So one of the things I tend to look at, is the behavior, the trend behavior. You get impulsive, corrective, impulsive, corrective. When you get a trend reversal from an up to a down market, you very often, not always, but you'll get impulsive up followed by impulsive down. Now we're in a downtrend, so the upward moves would tend to be a little bit more choppy, and then the downward moves are impulsive. What I'd be looking for is a sell-off that creates a lot of panic, and then a sharp upward move. And that would be the earliest signal of a potential bottom. And I'd start buying if there was panic in that selling, and then suddenly we had a 4 or 5 day rally where it just shot straight up. I'd probably start getting into some positions because we've pretty much checked off all the boxes of a bottoming process. Now sometimes that initial panic sell-off isn't the bottom. Sometimes it tries to recover and then has maybe has one more low, or maybe comes down to retest it. And one of the clues is it comes down to retest it, and maybe things are even worse, but the chart doesn't go to a lower low. That's something you could look for. Or you get that impulsive move up and it starts to pull back, but it's more choppy on the pullback, as you would expect within an uptrend. Those are technical things that I would look for to indicate a potential trend reversal. So that's kind of where my expertise is, and what I would be, and I'll definitely be pointing that out in these classes if I start to see something like that taking place. S&P chart, though, you can see we did fade a little bit at the close, which could have been a little bit of a warning sign there. We did kind of come back up and retest that break down, I guess you could call it. We broke down below there on Monday. Tuesday, the market was kind of just waiting for the Fed news on Wednesday, and then we got the Fed news. It rallied back up to that area. And then obviously we've gone lower now. We have to back out now and start looking at another support area. One of the ones that I've talked about, I have to go back a little bit further here. Update this. Or I might have to go back further than that. I think I have to go back further than that. Hold on. Because one of the areas is this previous all-time high right here before we had the COVID drop. It's right around 340. And we're not that far away, but that's why I'm wondering if we're building towards that panic sell-off right here. Because again, it would make sense. Again, I'm not trying to predict anything, but it would make sense, because one thing I talk about is what creates panic selling. Well, it's when you think you bottomed, but you haven't bottomed yet, and you start buying, and you think you're at the bottom, and then suddenly it reverses, and now you're like, well, I thought for sure that was the bottom. How much further is this going to drop? And you start panic selling. So I'll be interested to see how the next few days kind of play out, because it could be that people are buying right in here, thinking this is it, and then it just keeps dropping. That could really fuel the selling. You could get a bounce where the market tries to rally a little bit, but that would probably need to rally for a few days to kind of change that sentiment, and then have to reverse it. So it could just be one of those things that we just drop right down from here, and then if we just have consecutive big down days where it's like, well, when is this going to end? That could be something that could create that. We could also see it drop a little bit below this level. I'm not the only one looking at this 340 level as a potential stopping point. It's only because it's this previous high up here. That could be, other people might be buying right there thinking that's got to be it, and then it dips below that, and that creates that panic sell-off. Again, I'm not trying to, I'm not trying to predict anything or tell you exactly how it's going to play out. What I'm trying to do is say, okay, this is what normally happens. Panic selling is usually when the company's a bottom. What might be some reasons that could trigger that? Could have been the Fed report yesterday that if it really came in negative, that could have been pointed to as the trigger. That's another thing, is a lot of times these panic sell-offs accompany some sort of headline news item that people can point to as the reason, for the selling. Maybe that's about to come. One thing I keep pointing out is a lot of times as you get near these bottoms, what gets exposed is these companies that have over leveraged themselves, and they're hanging on, and then it just gets to a breaking point where they go belly up, and then it hits the news, and then that can kind of create panic. We're already seeing, in the crypto markets, we're seeing, a few weeks ago, there was I can't remember the names of them, but there was the one cryptocurrency that went belly up, that went out of business, bankrupt, basically. Just over the last couple of days, there was another one that halted trading. You couldn't withdraw anything. That's not a good sign, and that usually doesn't lead to things getting better. It usually leads to things getting worse. So we could be seeing a little bit of a snowball effect in cryptocurrencies. Obviously, Bitcoin's been taking another nosedive as well. Those are all bottoming type things that you start to see. But I wouldn't be surprised if in the next, especially if we go lower than where we are right now, we start to see announcements of maybe big funds that are going bankrupt, that bet too heavily that we were recovering right here, that lost some money on the way down and said, okay, but I can make it back if I call the bottom and get the bottom, I can make all that money back very quickly. And then it does the opposite, and then suddenly, there's that panic sell. So anyway, that's something to kind of keep an eye on. A lot of times there's a kind of a headline reason for the selling. I know there's always reasons for selling, and you could start telling me, well, could it be this or could it be this? Right now, there's really nothing that everyone's focused on. Obviously, inflation is what we're focused on right now, but no specific headline that we could say, that's the main linchpin that's causing the market to really panic or fall apart, because it's not panicking yet, so we don't know what that headline is just yet. But anyway, that's just something to kind of watch for. But just to give you another target area, obviously these levels could be other target areas, but they're so close right now that I wouldn't view them as being any more than a bounce. I mean, just think about it. A few weeks ago even, we thought this was ridiculous. I know some of you, when I pointed this out as a possible pullback point, let me know your opinions, that you thought that I was crazy and there's no way it's getting to that point. And now how do you feel about it? Now it's like we're two big down days from reaching it. Another reason for this as being a key level is because it's a little bit more than a 50% retracement of that entire move up. And so, about a 50% retracement is usually what you look for on any pullback or retracement. So it also makes that a significant area. So anyway, that gives you a little bit of context there to keep an eye on. we'll kind of watch for that 340 level. All right. Let's jump back in. And again, most of these indexes are going to be about the same. You're looking for kind of the same thing. I would point out that the Russell, and not to mention that not only are these selling off, but we are starting to get to the far left side of the extreme reversal risk. We see this on the Qs. And it'll probably get close to there. Remember, this is updated as of the close yesterday when we bounced a little bit. So we'll probably see that move a little bit to the left after the updates tonight. But the Russell 2000 down over 4% today. And so, again, you're seeing small caps kind of lead the way down. That is something to look for as a potential bottoming signal. Is do you start to see the small caps outperform? So if we do start to see a rally, do you see the small caps outperforming the Dow, for instance? So now the Dow has really held off. It isn't down as much percentage wise as the Russell and as the Nasdaq. So do you see that reverse? Do you see on some of these upward days where the Russell is up 4% and the Dow is up 2.5% or something like that? You see that outperformance. That would be something to kind of keep an eye on as well. Now the bond market has had an interesting little bit of reversal today. We'll see if it could just be that it's about to just correct like it did before. But back in here again, that was kind of a corrective looking move. We broke through. Went to a lower low right here. We've got a little bit of a bullish reversal candle today. But again, the thing to watch for is it choppy? If we rally in the bond market, is it choppy, back and forth, kind of sideways looking, or is it real sharp? Now, we may not know that initially. This looked like it was potentially impulsive up. Remember me? I talked about that back in this when that happened back in here. You'd look, but that's something you'd look for. Do you see an impulsive, a sharp move up? And then when it pulls back, is it more corrective? Does it start reaching higher highs, higher lows? That's going to be a major breakout area right here. If it gets above that high, that previous lower high right here, that could be a signal. But it's more than just getting above there. Do we have like more of an impulsive move that gets above there? It would be a key reversal signal. And it's probably what his oversold as the bond market is, this relentless decline that we've had. If it did start to rally, it should rally sharply. It should be several days in a row with some big moves, because a lot of people are short bonds, and so there'd be that short squeeze that would cause things to move up very quickly. So that's something to keep an eye on over the next week, and especially as it relates to the market sell-off. Gold, again, gold is just so hard to read. We were talking, the last update we had, we were talking about this little sideways correction right here. This was impulsive right up off the bottom. Let's choppy sideways here. Looked like we could have another move up. Had this big, bullish reversal candle where it opened lower and came all the way up, and then didn't go anywhere. It just stalled out right there and went lower. Now we're starting to see it rally a little bit here. Maybe a slightly higher low right there, but gold has been so erratic. You'd have to just be, and it usually is the case that people that trade the metals in particular, that's all they trade, and so they just become real experts in every little behavior that these make. They're usually aware of every little fundamental reason that precious metals move, and And I know the dollar is tied to that too. The dollar movement, they tend to move inversely. But yeah, I don't look at me doing any gold trades anytime soon, just because I haven't had much luck reading the charts. Oil's still in a strong uptrend. Pulled back a little bit recently, and I did get out of. I got out of a lot of things on Tuesday in the portfolio, just because it was starting to look like we could get a bigger sell-off, and they were, some of them were dropping below stops and or getting close to stops on the charts. I did get back into USO though, with today's bullish reversal candle, just because, again, as well as oil's held up. I know a lot of oil stocks, individual oil stocks, got beaten up pretty good. Chevron was one that I was holding in the portfolio. I got out of that one. That had a pretty steep drop as well. But the oil itself is still in an uptrend and still outperforming. And that will end at some point, and it could be that could be one of the triggers that causes the panic selling, is that suddenly we see oil drop dramatically. Although you could also make the argument that that'd be a bullish signal, because that could mean that commodity, cheaper oil prices could help the economy and help. Anyway, that's why I don't get into fundamental arguments, because I just trust what the chart is telling me. That's what people are trading, is what the chart is showing me. But today it looks like a little bit of a bullish reversal. We did pull back a little bit. We've already broken out, so I went ahead and got back into that trade. Dollar has been hard to read. Remember last update, or a couple updates ago, we were talking about this being a correction of this impulsive move down. It looked like we were trending down in the dollar, or going to have another move down in the dollar. Then we had a sharp move up. I think it was right in here, and I said, or it might have been right before that, I said, if we get above a 50% retracement of this drop, despite the fact this is acting like it's going to make another move down, this looks corrective right into here. I said, if it gets above that 50% retracement level, you have to recognize that it's shifting the probabilities, that maybe it does rally up to a new high and break out to a new high. And that's exactly what happened. It got above that 50% level and then shot up to a new high. And then the last 2 days, we've got an impulsive looking move down. So, right now it's very difficult to read as far as trend behavior. Could it be that this was that one breakout move higher, and now this is the start of a decline in the dollar and it starts trending down? It's too early to tell, but I'd be looking for the same thing. Does this continue to have an impulsive move down? Does it go to a lower low? When it rallies, does it give you a lower high? Is it a little bit more choppy as it rallies? Which is what we're looking at here, and it didn't do it. So that gets back to what I always say, which is, market doesn't always behave exactly the way we expect it to. If it did, we'd never be wrong. It at times is going to make the lower probability move, and it does it enough to keep that uncertainty. But it doesn't mean that understanding these characteristics doesn't give us an edge. It does. These things I'm teaching in the class are things that the average person doesn't know what to look for. And so they're not seeing some of these signals ahead of time. And it's obvious because, again, you turn on CNBC some days and it's like, the market's down today, it's terrible, and you're seeing a strong bullish reversal candle, and you're saying, well, they're not seeing that this is probably done going down. This is giving me a buying signal right here. Or the price action is giving me a buying signal. So we'll continue to look for these clues. And what I'm saying is we're right in no man's land right here. I don't know. We're right at a 50% retracement of this move up. Could it hold right here and go higher? Is this the start of a move? Are we in an impulsive move down? I don't know. So I need to wait a few more days to get a little bit more data on the chart there to see. And it probably won't be until, I don't know. If it has another day down, because we're right at that 50% retracement level. We had another sharp day down. You've got impulsive down, which is a strong bearish behavior, and you're below that 50% retracement level, which is typically the area that it would hold if it's going to go higher. So definitely that would be a probability shift to the bearish side if it gets below that 50% area. It's right at it right now, so I would really, today is not telling us anything. But if it drops lower, that would probably tell me that it's more likely the dollar is starting to trend down again. But we'll keep an eye on that in the next update. The VIX, and this is what I was talking about earlier. I got to see the VIX. This is the March. Is that March or February? Yeah, beginning of March high right here. We got to get above that, because I remember that March low, and there's still it was starting to get a little panicky, but it wasn't the panic type sell-off that you would expect. And obviously it moved lower than that. It's gone lower than that. It wasn't the bottom, and so I just have to see that VIX get above there to think that we're to even start a discussion of being at the bottom. And you know what? It could be. I've heard a lot of people talk about that a lot of people are expecting that, and so maybe it doesn't do it. Maybe the market doesn't have that panic sell-off that throws everyone off. Yeah, you could make that argument with everything, and that's the thing, is that I try not to get too caught up in lower probability outcomes. That would be a lower probability bottom. I haven't seen one like that. And so, although, if I start to see a rally that lasts, if we start to rally from here and 2 months down the road, you're like, you're missing the rally and you better start doing something, because it's, then I might have to come back and say, okay, I blew it there. It got me. That wasn't the bottom. But the good news is that who cares if I was late, if I'm late, even if we're in a new bull market that could last 2 or 3 years, I'm still going to make money. I mean, I'm still going to do well. And if you look back at the last 6 months, we've still done well in the portfolio, despite, the market being in this relentless downtrend. So I'm not. In other words, I'm not trying to be a psychic and predict the bottom. That's not my purposes, and I'm more than willing to shift if I see the charts telling me I need to shift. But I also don't want to be focused on expecting lower probability outcomes, and I just need to see that VIX at least get above here. And it is back up today. I mean, we dipped down, and this is another reason why I thought we could rally for a few days. We had a really sharp drop in the VIX, and I get it. A lot of that was people hedged going into that Fed meeting and that Fed announcement, and then they took it off afterwards, and that caused the VIX to drop. And they're probably wishing they hadn't taken it off, because it reversed right back up today. We'll see if that continues to spike. Hold on here. Yeah, there's a comment here about some stocks that are testing their bottoms. There are a few of that. There is some of that going on. And that's the other thing too, is that not everything's going to bottom at the same time. And we're not saying that has to happen. Some of these, there's some of these stocks that, and they've already taken their major panic sell-off, and they're probably not going to hit. They're probably not going to see new lows. So yeah, there are some stocks that have already bottomed. But there again, knowing that the market probably hasn't bottomed yet, you just want to be a little bit careful, because you still don't know if those are the lows. Maybe they do go just a little bit lower if the market really gets panicky. So I really want to have that market momentum behind me before I get aggressive. And it gets back to what I said at the beginning of the class. I'm not saying if you have a longer time frame and you're more of an investor, there's plenty of things out there that you can start to nibble on and get in. Knowing that if you're not at the bottom, you're very close, and they're big enough companies that they're not going to go out of business tomorrow. They're not. They're going to be around, and so that from a reward to risk standpoint, yeah, they're probably in a good reward to risk position where eventually they're going to end up going higher and you're going to be fine. There's another question here. Would it make sense to take positions in market contra funds? Are you talking about inverse ETFs, waiting for the panic selling, like the SOXS and the SARC? Just want some clarification there, because those are ways that to obviously to make money on a panic sell-off. We've been using them in the portfolio. Those are things that you could use. It doesn't have to be those ones, but you could use inverse ETFs or just be in cash. I mean, I've got a big cash position right now in the portfolio. Do I think HES is the same as other oil stocks in general? If you're asking me a fundamental question on HES, I'm not a fundamental trader, so I'm not the person to give you advice, and I'm not an expert in the differences between oil stocks out there, oil companies out there. And I could pull up the chart here of it real quick. I mean, this looks about the same as about every other oil company out there. So if you like this company and you want to know how does it relate to other oil companies out there, you could do some research on it from a fundamental standpoint. It is a 94 strength rank, so it does have a pretty high strength rank there. It looks like a nice strong uptrend. It has participated in the rally, hasn't gone to a lower low yet. So technically it's not broken down yet, so it would look okay. But again, if you want me to compare it to Chevron or Devon or Marathon or something like that, I'm not the one to. I could give you opinions, but you wouldn't want to follow them from a fundamental standpoint, just because that's not my strength. That's not what I really focus on. I put it this way: I would take advice from me every day as far as the charts are concerned. I would never take advice from me if for fundamental reasons. Now, I do give you fundamental reasons sometimes in these updates, but you'll notice a lot of times I'll put a disclaimer out there that I'm not the fundamental guy. So take that advice with a grain of salt, so to speak. You may want to double check that with someone that's an expert in their fundamental analysis. So, all right, let me get back on the update here. We only have a couple here left to look at here on the watch list. VIX we just looked at. SMH really getting hit hard today. And again, this is another leading indicator, down almost 5.5%. But that's something to look for. Is you start to see the chip stocks. Now we're usually comparing this with the NASDAQ 100, but do you see the chip stocks outperforming the NASDAQ 100? If we throw the NASDAQ Qs up here again, they're down only 3.5%. So the chips are having a bigger sell-off today than the NASDAQ 100. Again, you don't want to draw a exact conclusion to this, but that would tell me that there could still be some further selling. What I would like to see is just the opposite of that, where the NASDAQ is down 5%, but the chip stocks are down 2.5% or 3%. They're actually rallying. that would be a contrarian signal that maybe we're bottoming, or maybe we could start, or maybe the selling in the NASDAQ 100 is close to being done if you start to see that divergence taking place. And then the transports, you're comparing this with the Dow Industrials. It's down. Transports are still getting beaten up. You might start to see them rally, even them going to new highs as the Dow Industrials are going to new lows, because the opposite was happening back here. We saw the Dow Industrials going to new highs, and the transports were, put in a lower high. They were going to lower lows. They were breaking down ahead of when the Dow Industrials broke down. Now, it's, again, very important you compare the Dow Transports with the Dow Industrials, the chip stocks, the SMH with the NASDAQ 100, because that's really what you're trying to see, is that those tend to be the leading stocks within those indexes, and you can see these subtle changes sometimes. You're not going to base your entire trade off of that. It's one of many things that you would analyze, but again, these are little clues that you could start to focus on or look at or recognize that could give you a little bit of an edge. And then finally, Bitcoin, for a while there, I was talking about, is this forming a little bit of a basing pattern for maybe a rally? We had already, took a big hit. We've already been down big in Bitcoin. But then this is where you start to get a little bit of that panic selling, and we're starting to see a little bit of that panic in cryptocurrencies in general over the last few days. We're starting to maybe see some of these smaller ones go under. There's going to be a consolidation. We saw it happen with the tech crash in 2000. A lot of those tech companies went under. Some of them survived. I mean, many of them survived. Let me make sure I represent that correctly. Many of the tech companies survived, but there's a lot of them that couldn't survive. And we're likely to see the same thing with cryptos. The stronger ones will probably survive. I think Bitcoin's probably the Amazon.com of crypto, but there again, I'm not a crypto expert. Some of you out there that are would tell me, oh no, this one's a lot more stable than that one. Although I think it's ironic that the one that went under wasn't it nicknamed Stablecoin or something like that, or did I get that wrong? But very ironic if that's the case. The first one to go out of business is the one that's nicknamed Stablecoin. All right. So going to the portfolio, you can see I'm mostly in cash. I did get into CF. Let me go over that. Well, first of all, we know why I got back into oil, bullish reversal candle. CF was based off of, had this strong bullish day on Tuesday. And this looks like a larger ABC pattern right here. And so the market was down. It was down on Monday, and it was down. Numbers down a little bit on Tuesday, not down as much, but it was down a little bit on Tuesday. But we had this big bullish reversal, and I've been waiting. This is kind of a commodity type play, fertilizer type play, and so I just put a stop. I got in and put a tight stop in just below that low right there. So it's just a reward to risk play. If it gets back up to the previous high, I could make 3 or 4 times what I would lose if it comes back down. I stop out. So I'm not worried about getting stopped out. Now it did open a little bit lower today. It was actually a little bit higher today, but it's faded a little bit. So we'll see. And then it may just be I get stopped out of this. But I like the pattern. I've been looking for an entry into this one. Excuse me. And so I felt like that was a good entry candle to get in. And then oil, for obvious reasons, it's been trending up. I got back in the SOXS. Now, I did get out of it. I've been flip-flopping on this one because I got out of it yesterday when we dropped, because we had, although, again, we faded into the close yesterday, again, going back to those direction alerts earlier in the buy-sell ratios, all that stuff I went over in the beginning of class, everything's pointing to an oversold market. And so I felt like we could bounce a little bit, and so I don't want to be holding these even if it's just a bounce within the downtrend, which I felt like, maybe we rally for a couple of days and then continue to move lower. So I got out of that. But then today, obviously, when we broke that support, I got right back in this morning, and it's doing very well since then. So, and then same thing with Sark. Now Sark's not up as much as the stocks, but they're and again, these stocks have been really beaten up. So it may be one of those things where they've already close to the bottom. But I'm just worried that we're getting real close to where these panic sells. I want to profit from it if we do, and so I'm sticking to these. These have helped me during most of the decline, so I'm kind of sticking with them. But like I said, I'm not trend trading with these. It's purely price action and expectations on the market. And if you don't know how to do that, if you don't know how to recognize these little subtle price action changes, then just stick to cash. Just stay cash. Hold on just a second. And I'm kind of doing a little bit of both. I'm mostly in cash, but I am trying to trade this a little bit to try to make something out of over the next week or so. But that's it. I've got 82,000 in cash. And I'm just waiting for the market to bottom. Now I did go through the watch list, and I can point out some stocks that still look pretty good. That maybe you're looking for a little bit of confirmation first, but still, this is a stock specific class, so I want to try to give you some ideas to maybe focus on. Let me get back to the watch list here. Let's look at that stock specific class watch list. Obviously, oil is one that continues to go higher. Would probably your safest bullish trade right now. And I'm not talking oil stocks either. It's just the commodity oil. Marathon is one that's taken a deep dive. We looked at TESS. It's kind of the same thing. This one has a 98 strength rank. But, if it starts to move back up and doesn't go to a lower low, so here's the last higher low right here. You don't want it to go below that. And it's already a pretty deep retracement of this last move here. So I wouldn't be buying it just because it's down. You'd want to see it start to move back up because it could break to a lower low with the way it's behaving right now. But again, you could put these in a watch list, wait for a little bit of confirmation. I got out of NOC. Remember, I had moved my stop up to this level right into here. And on Tuesday, we dipped below that. And as soon as we dipped below that, I could have waited to see if we closed below it. But again, with not knowing what the Fed meeting was going to do with the market, I didn't want to be, I didn't want to take the chance. I could always get back in. But I do like these. I do like these aerospace stocks. When the bottom hits, these companies are going to be making money for several more years. Remember, all these weapons have to be replenished, and they're going to be replenished worldwide, not just with what's going on in the Russia-Ukraine conflict, but countries surrounding Russia are now putting in orders for weapons that they didn't think they needed before, but now they're desperate to have. And that's huge demand that's eventually going to be showing up on the balance sheets of these companies. And I'm surprised that they haven't made. I mean, they've made some pretty big moves, especially going back to when the war first started. You can see that had this big rally up through there, and that's a pretty significant move. But and it could be that what's been going on is obviously the longer the conflict goes on, the more that demand could be picking up, and or that the order, if people see this as a threat, if Russia's winning and they end up winning, these countries surrounding Russia could really get panicky and put in bigger orders to buy weapons. I just, there again, that's a fundamental reason. And all the chart's saying is it's consolidating pretty heavily through here, but it is kind of maintaining higher lows. So you're kind of getting a little bit of a squeeze, kind of a triangle or wedge type effect. When it breaks out, it could really go, and you could wait for the breakout even, and you wouldn't have to take a chance right here, or just to wait for markets to look like they're rallying, because then you've got the whole momentum of, that's one thing to consider with some of these, and there's great fundamental stories out there with different companies, but these big fund managers, they're scared to buy right now, and that could be the only reason why these other companies haven't really taken off. But when that panic selling ends and they're putting capital to work again and they're getting aggressive and they're the ones that move the market, you get that momentum where there's buying momentum, and there's a much stronger probability that these companies that you like fundamentally are going to work out. And so that's why these stocks are still on the watch list, but I'm not saying, go buy, load up on them. I am out of this one, but I am going to be anxious to get back in if it holds this chart pretty well, and we start to see the whole market turn around. This is one of those ones I'd want to be in for several years. Lockheed Martin, same thing. Although again, the chart looks pretty bad right now as it's dipping below that range. When things turn around, and if this starts trending back up, now if it keeps dropping and the market's turned around and this thing is still going down, I'm going to go with what the chart says. I'm not buying as long as that thing is telling me it's wants to go lower. It's acting like it wants to go lower. But if it does start to look like it's trending up, there's a good fundamental argument behind it as well. So same with LHX, General Dynamics, Raytheon, HPK. This is one of the oil stocks. Again, this is still a pretty nice pattern here. You got this kind of cup with handle formation that's you're getting. Again, it depends on oil stabilizing and going back up. There's about a 50% retracement of this move up. So that chart still looks good. Let me switch this over to signals. You could wait for it to go back to a buy signal. This is one that looks pretty good. Some of the coal stocks, Arch Coal, still looks good. Again, you're not seeing a big breakdown with the market selling off. These are just kind of moving sideways. That's a pretty bullish sign when you see that. VET, another oil stock, same thing. These are all just out of the watch list. We've already looked at these in the classes before. BTU, another oil stock. So looking, we do have a lower high right here. So maybe you'd like to see it get above that, have a higher low and a higher high, start acting more like an uptrend again. CLF, I'm going to dump. That's just way too low right there. I'm going to probably bump that out of the watch list for now. ASIX, probably the same thing. We'll dump that one. KOS, another oil stock. Again, same pattern. These are, they can recover. The charts still look pretty good. TELL, not the best chart. There's probably better ones, but CF, again, I got in this one. Now, again, I got in on a sell signal, but I'm just defining risk right here, and I'm looking at the larger chart pattern here. And, just to get back at this high, you're looking at eyeballing it, it's at least about a 3-to-1 reward to risk. So that's not bad. I'll take that anytime. DVA, another commodity-related stock. You want that to hold to a higher low. There's a higher high. Overall, we've been kind of moving sideways through here, but and it's up today, so on a down day. So if it can start to maybe go back to a buy signal or get back up a little bit further, that one could be interesting. ADM, same thing, although that one's down today, but could be the larger ABC pattern right here, correcting that huge move up it already had. So this is one that, even though it's at a sell signal, that if it had a big up day on good volume, I might, kind of like what CF did, I might consider the same thing where I'm getting in, stopping out real tight, because there'd be a huge reward to risk. And the trade would be not based on the signals, but it'd be based on the chart pattern, the possibility that that's a larger ABC, maybe that correction is done. But there again, it helps if you have a little bit of market momentum behind you as well. You wouldn't want to be loading up on all these, is what I'm saying. So CF was my trade. So I probably wouldn't do ADM because I don't want to, I still want to be mostly in cash until the market momentum is a little bit more in my favor. Coca-Cola, I'm going to leave Coca-Cola in there for now, but that one's getting beat up pretty good. Same with MLS. This is another fertilizer company, so that's one to maybe keep an eye on. GoGo, I'm probably going to drop this one, although it's possible this could be an ABC. I just don't want any computer and technology stocks until market momentum is in our favor, because I don't think any of these are going to go up significantly without the market rallying significantly. And you can make the same argument for SIMO, but this one's a little bit higher up on its trend. This does look like a potential ABC pattern right here. Now, again, going back, when I first put this in the list, it was because that looked like the ABC pattern. It looked like it could move up from there. It never went to a buy signal, come back down. Now it's looking like maybe a larger ABC. We're getting, it could get down a little bit further here to that 50% retracement level. But because it's not below that 50% retracement level, I'll keep this in the watch list in case the market starts turning around, because I do like this big bowl-shaped move. It still looks like it's kind of forming that cup with handle pattern. So I'm going to keep it in the watch list, but I'm not going to get into it. All right, so that goes through the list. Gives you, again, not new ideas, but some of the same ideas. I'm telling you, this class is going to get a lot more interesting when we do, it'll be interesting for a little while, because when we do bottom out and start moving up, we're going to start getting into things. We're going to start deploying that capital, and then we'll get to a point where we don't have any more capital left, and we're waiting on these trends just to keep going up. But then we'll like I said, I'll keep. There's still going to be. There'll be tons of new trades. Let me put it that way. So even though I may be filled up in my portfolio, these classes are going to be interesting because we're going to have new stocks that are trending up, that are giving us signals that we can get into. And if you don't believe me, go back a year ago and view one of these classes, and there were, view the Thursday class for 3 weeks straight, and you'll see there were different stocks that we go in, and there'd be some days a big list of new ones to get into. So if you're like, man, I've been attending this class for the last month or two, and we hardly ever have any new stocks to get into, or it's always oil, or aerospace, well, that's just the condition we're in right now. And and it'll get more exciting. But I'll promise you, the markets sometimes are not exciting. There are times in the market where the smart thing to do is be in cash, and you'll be glad you were in cash. I promise you, to avoid all this mayhem. And if you did listen to me back when I first started talking about building a cash position, you're thanking me right now. You've done very well, or you've lost very little over that period of time. And you're going to be really glad when you have all that capital to really deploy when things are going to have a high probability of going up, and you're going to have all that market momentum going up. So, but to get to that point, you sometimes have to go through some weeks of boring, do nothing, and sit on your hands, and it's hard. I get it. You especially those of you that are brand new and you just funded your trading account, and you're saying, let's get started. I'm ready to go. And then the first thing I'm telling you is wait. And you don't want to wait, but it's the smart thing to do. And believe me, you want to be the smart trader. You don't want to be the dumb one that just gives their money to the market. And we're getting there. Now, the good news is that these extended bottoming processes like this don't happen very often. The last major one I'm talking about was back in 2008, 2009. 2009 is when we bottomed off of that financial collapse. And this one isn't as bad technically as that one was, but and there were some other decent bottoms here and there between then, but they don't happen very often. And then usually when they do happen, you get in these nice bullish runs that it feels like making money is easy, and it feels like the market's going up every day, and you feel like you're the smartest person in the world because the market's going up every day and you're long. You're not the smartest person in the world. Nobody is, but it feels that way. You got to kind of fight that as well. But we're getting there, and hopefully I can kind of guide you through it as if we start to see some of that panic, possibly, and maybe not. Maybe we rally a little bit here, and then it does have that rollover a little bit later, and then we have that flush move. But like I said, focus on that VIX. Till that VIX gets to new highs, I'm really not going to be allowing myself to believe that we're at that bottom yet. So anyway, have a great week. Like I said, I think it sounds, some of you made comments that the market is closed on Monday. So have a nice trading holiday at least. And we'll see you on Tuesday. Hopefully we get that technical issue fixed for the market update class, and we'll see you on Tuesday for the market update. Thanks everyone. Bye now.